This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. It is your weekend edition. My name is Merlin Rothfeld. As you can see, I got no one to the left of me. I got no one to the right. Alone in studio today, but fear not, with the powers of telecommunications. We have the ambassador of opportunity joining me today from an undisclosed location. John O'Donnell's with us. John, how you doing?
Great, Merlin. How are you?
I'm good. This will actually be the last, I believe, the last show I do with you in 2020 or 2019.
Oh my goodness.
Yeah, crazy.
How will we ever survive? I mean, what will the Merlin fans have withdrawal? How will we get through this, Merlin?
It's just, think of it as a vacation away from me. It's not a bad thing. It's a good thing. Well, we'll talk about some of our thoughts and forecasts for 2020. As I know, I'm sure some of you are wondering what on earth I think, which doesn't really matter because I was colossally wrong on so many things this year. I had a couple things right too. Let's start off with the big stuff. Obviously today, everyone, and it's so funny how people were messaging me saying, I told you so, we got a big deal in trade war's resolved, oh, it's over. And I had to I wanted to reach through the phone and grab some people by the neck and be like, stop. We've heard this same story again and again and again, that there's a deal, but nothing has been signed. So yes, there's an agreement, but nothing physically signed with regards to phase one trade war. So we're not out of the woods yet. Obviously, we had a really rocky after-hour session last night. You guys might have seen those futures were way up, then all of a sudden they were way down, and end of the day, relatively positive. So, John, take on the trade war. What am I nuts? Am I being a bit too rude here?
No, I don't. I think you're being. First of all, we have a verbal agreement between two parties that have a history of not being, shall we say, their word is their bond.
Yeah.
I mean, it is not a deal until it is signed. And by the way, I used to say it's not a deal until it's signed and the statutes of limitations run, because we have volatile personalities on both sides of this trade war that have a history of not living up to their word and break agreements. Yeah. I mean, so. You know, just because we have it on a piece of paper is not going to make this a slam dunk.
Right.
And now we want it to be, and maybe the most important component that is on the table that has been verbally agreed to, assuming both parties live up to their agreement, is the IP theft.
Right.
That's a very, very big deal. This message about buying $50 billion worth of agricultural output is kind of a smokescreen, because back in the day, before we had this Trump-initiated trade war, the Chinese bought $26 billion worth of farm output in a single base year. So to get a $50 billion promise to buy agricultural output spread over a 2-year period of time, by the way, is only taking us back to the baseline before the trade war actually began. But I think we all need to keep in perspective. I mean, I want this to work out. I don't want our president, our company, our country to fail in this endeavor. But we have two parties that have a checkered at best history of their word being credible.
Right. You know, it's funny because when you read it today and kind of go through some of the statements that were made by both trade departments and presidencies and all presidents, it's always saying, yes, we have a verbal agreement if we do this and this, and if America does that and that, if China does this. Sure, so yeah, on a high level, they're agreeing to everything, except there's these underlying pieces, which we've seen in the past have been pieces which have not allowed those trade deals to be signed. So, you know, it's great. I think that this just is a continuation of the wonderful manipulation. It's a great way to get these markets to pop. We've seen it over the past couple of days. Great move to all-time highs in the equity markets. We might see something on Monday. Well, you know what? We're going to put it on hold, and then all of a sudden markets will drop. You know, maybe give back half the gains, and then we'll go a week, and then we'll say, hey, trade deal signed. It moves up 3%. oh, no, it's not going to be signed, it drops to 1.5%. So it's this, 2 steps forward, 1 step back, but nothing's really changed, but it's nice. It's helping those markets move up, so the bulls got to love it.
By the way, think about this for a moment. What is the possibility that a deal gets signed? Let's assume it got signed in 30 days. Wonderful, okay?
Yeah.
And then as we start to get into it, and we have then the area of enforcement. And the enforcement clause also carries things like both parties agree, or at least one party is going to have to agree, to stop their alleged currency manipulation. Well, all of a sudden there's a little bit of currency manipulation that goes on, and our president has a temper tantrum, a tweet storm, and next thing you know, well, they broke the agreement, so the tariffs are back on.
Yeah.
I mean, you tell me, is this going to be a smooth, with no bump enforcement period for the next few years?
No. If you're making this a road analogy, I don't know if you've ever watched the Baja 1000. You ever watched that race?
Yeah, but I got an idea what it probably looks like.
To me, this is the Baja 1000, man. It's just crazy by the seat of your pants.
Without shock absorbers.
We got shock absorbers. Even with shock absorbers, it's still nuts. So, yeah, I don't think. I hope we get something signed. But I'm one of these guys.
I do too.
Over the years, I hear it's not just Trump and his administration. It's every presidential administration, Democrat, Republican, whomever.
Well, look.
Until something's signed, sealed, and delivered, I've learned to not
There's
count it.
nothing good about being bullish for growth and prosperity and freedom when two of the biggest economies in the world are fighting with one another. There's absolutely nothing about that narrative or storyline that says it's good. It's not good for jobs. It's not good for innovation. It festers the need for more crony capitalism, which nobody really wins, except even the protectionist politicians get reelected. But it's just not good. We need to get this resolved, and I will say a prayer this weekend that it does get resolved. But, I'm from Missouri. You remember what the state slogan of Missouri is, Merlin?
I wouldn't have the slightest clue, John.
It's a show-me state.
Okay. Yeah, there you go.
I'm in a show-me mentality here right now, okay? But I'm rooting for the home team. Don't get me wrong. Please don't misinterpret my concerns.
No, I'm not misinterpreting. I'm right there with you. I'm tired of hearing that it's, we've got a deal. We don't. Until it's signed, so shut up. I mean, I know this isn't even a fair analogy, but people always ask me, and for those that don't know, I am a huge fan of Halloween, and I always make some costume. Normally, it's pretty elaborate. Last year was pretty weak, I have to say. But I make these very elaborate costumes, and people always ask me what it is. And I don't tell anybody until the reveal. The reason for that is years ago, I had this amazing idea, and basically I was going to make my a full-body suit out of LED strips, right? And I work with a guy who's absolutely brilliant, Mike Lemp, one of our colleagues here in the IT department. He's just a genius. He and I talked, and basically said, what we could do is I could make an app for your cell phone that you could take a picture of anything or play a movie, whatever you want, and it would broadcast on you. So we'd have to program your body so it looks like I could basically be a walking TV screen. I thought, oh my God, that would be one of the coolest things. I could literally take a picture of a wall and then stand against the wall and blend in. So I wanted to make that costume. I told a few people it was logistically too hard for me to do, and I never did it. So I felt like a complete idiot, and all people felt let down because I didn't do it. To me, this is the exact same thing. Just shut up. They shouldn't say a damn word about this stuff until they actually say, okay, we signed it today. It's like a false progress report about something that each side thinks that they're doing better than the other person on. So just shut up. It creates this uncertainty in the marketplace, which drives us nuts. I know some of you guys love it. All in all, I think it's been great for the market from a boost perspective. But I just want to see stuff get done and not have these little micro updates of inadequacies and ineffective updates.
You know what I find interesting is the other side of the political aisle has not really had much to say about trade. I mean, they've been remarkably quiet. Mm-hmm. They haven't, given it a thumbs up, haven't given it a thumbs down. I mean, what have you heard? I mean, have you heard anything? I don't really watch those debates very frequently, but I haven't read any reports from either side. I mean, they're always, throwing barbs at Trump for some other reason. Why not this one? And they've been notoriously silent.
Yeah.
I find that amazing.
Well, some would say that we've got our attention pulled in other directions, and that's the same historically. There's always something drawing our attention away from one. The old magician sleight of hand trick. Let me go back to something you mentioned earlier, currency manipulation. I'd like to get your 2 cents on this one. I did a webinar on Thursday which touched on some of these issues, but I wanted to bring it up a little bit deeper here. You mentioned currency manipulation. And of course, we are the country that said that other countries are doing currency manipulation. Of course, let's be honest, it's the pot calling the kettle black. We are the ones who are manipulating our currency. Now, Trump has been very obnoxiously loud about it, challenging the Fed, saying that we need to be cutting rates, we need to make our dollar weaker, which of course would help with exports. However, that is really telegraphing to the world your intent to make a currency weaker, therefore you're the currency manipulator. China did something recently, well, not recently, this year, I believe, I think it's like $100 billion that they've issued. I have to get the exact numbers, but it's definitely up there, where they're issuing debt in US dollars as opposed to yuan. And I thought, what a brilliant idea, and correct me if I'm wrong, but this is how my mind thinks. If they're issuing debt in US dollars, that means that at some point they're going to have to pay back that debt, meaning they'd have to buy dollars and pay back the person who bought those securities from them. But if the US intends on weakening their currency, the Chinese are basically saying, go for it. Weaken your currency then, because we're going to issue all our debt in US dollars, which we will have to buy back later at a much cheaper price. Therefore, we win and we make money on the deal. So go ahead. It's almost like they're doing a currency manipulation hedge against the US deflating the dollar. Am I out of line with that? Am I thinking there?
Well, I think you're missing one component that you need to put into your thinking, and that is this. The Chinese government, i.e. the Central Bank of China, has an unending source of dollars. Remember, when they sell goods to American consumers, when they sell $1 billion worth of goods produced in China to Walmart, those contracts are in dollars. Mm-hmm. Those dollars go from Walmart out of, first of all, your credit card and my credit card. Let's assume it's $1 billion of gross sales. Let's assume Walmart has a 20% gross margin in that. Well, 800 million of the billion go to the Chinese garment manufacturer. Let's assume it's for a set of garments over the year. That money is, by law, turned over to the Chinese central bank. That garment manufacturer can't use those dollars to pay for land, labor, and capital. They borrowed their money in yuan. Mm-hmm. So the Chinese central bank has a constant source of dollar-denominated assets flowing into their treasury. And so they can afford to borrow dollars and pay them back because they have dollar cash flow that comes into their treasury.
Yes, but this is a little bit different because obviously they're going to have inventory of U.S. dollars because of transactions. That's fine. But when you look at issuing debt, now we're talking debt products which might be 3 years, 5 years, 10 years out. So it's almost like saying, I know that you guys are going to manipulate, and in the future down the road, if you manipulate enough, drop it as far as you want because we're just going to pay back our U.S. dollars. We'll buy those dollars incredibly cheap at that point in time.
Well, what do they do with the dollars they get right now? You know, they have a $500 billion a year trade. We have let's assume $500 billion a year trade deficit, hypothetically.
Yeah,
they're taking that money and they're buying American debt already. I mean, they're buying treasury bonds. They're buying mortgages that have implied guarantee of the U.S. government. They're buying corporate bonds denominated in dollars. So remember, we are the reserve currency of the world, and
for now,
they need, as a hedge, dollar-denominated assets. Now, that doesn't mean they don't have the capability to buy sovereign debt in Europe, but then you're going to be looking at a negative yield, and I don't think those Chinese are that stupid.
No, they're definitely not. I'm brilliant, actually. I think I look at a lot of what they're doing right now, and I'm going, wow, this is a great chess move because it's just a giant chess game. Oh, man, I had a great thought in my head, too, about what would be going on. John Med on Online Trading Academy's YouTube channel says, what could be the effect if a deal fails? There will be a deal that happens ultimately, but certainly at some point we're going to get a deal. This is the political carrot that's going to help the administration in November of next year get reelected, the current administration. So to me, this is critical that something gets done. If it doesn't happen this weekend, if it doesn't get signed this weekend, no big deal. I think John Med, who said the question, it's really simple. it's kind of what I mentioned earlier. They say we're going to have a deal, markets rally significantly. They say the deal doesn't go through, it gives back about half of those gains. So we're right back where we started with nothing had changed, but the market's up significantly. And that's really been what's been happening for month after month after month, and I don't see that changing anytime soon.
Well, part of the problem we have is that by not having a deal, or the deal that we think we have blows up, or there's road bumps, or there's renegotiation. Just because you have a deal doesn't mean the deal can't be renegotiated quarterly. I mean, especially when you look at the category of goods that have been tariffed. And I by the way, I want to applaud your webinar that you did yesterday. I thought that was very, very well done. I mean, one can kind of nitpick with some of the opinions, but I thought the whole piece was very well done. And I would encourage...
Nitpick, John. Nitpick. Come on, let's nitpick. I like when we get a little back and forth. But what was I incorrect on? What didn't you like?
Well, I don't have it in front of me.
Sure.
No, I'd have to pull up my notes. But if you want to take it category by category, we could have a quick summary if you'd want to.
I'm sure the audience would love to.
If we were going to have a nitpicking contest, I'd have to get out my notes because I did take copious notes.
Wow.
On that
I'm impressed that you took notes. I appreciate the nitpicking. And look, some of that was just my opinion. And I'm sure that we have some of the viewers that are watching this show right now would like to nitpick. So you know what? It's my last day until the 30th of December. So let's nitpick. I started off with the political environment. I started off with the elections going on, which I think is a major force going into 2020. Did you have anything to nitpick with on the elections?
And what was your summary point about the election? And I'll tell you if that's worthy of my nitpicking or whether I agree.
My summary point of the election is this. I don't think any one of us is really going to influence in any way, shape, or form the election, so I think we have to be much more responsive to it and say, all right, when these candidates are announced and when the election starts to happen, if we get a specific direction, whether it's Republican or Democrat, and then again it depends which Democrat gets in there, or Republican, I guess Bloomberg could be a contender, now you have to look at it and say, when that administration change happens, if I'm looking at the long-term portfolio aspect, how do I reallocate or rebalance for that? It doesn't do us any good to get all worked up that it's going to be a Democrat or Republican or this person or that person. It will be what it's going to be. We have to be flexible and accommodate and adjust our portfolio for that. That was my main overall takeaway.
Okay, well, my summary of that is I believe Trump is going to win the election.
Okay.
I don't know if it's going to be close. I don't know if it's going to be a landslide. It's my opinion. But I don't think the other side has a prayer of winning this election. And depending on who they stand up to debate Trump, I think Trump is going to wipe the floor with them. I don't think they've got a leg to stand on, And I base that on the fact of our low unemployment rate. I mean, I know that from previous elections that I've been part of, and people will vote their pocketbook before anything. There are groups of people that are dissatisfied with Mr. Trump because he made some promises he wasn't able to keep. But what's new? Almost all politicians make promises they can't keep. But I would, so I think that there's going to be, remember, with the China that could blow up, I mean, we got 11 months to go before this election takes place. There's a lot that can happen in 11 months.
Sure.
And that could cause that to change. So just because today, here 11 months ahead of the election, I happen to feel that Trump's going to win, I reserve the right to change that opinion every Friday.
Of course. Well, we certainly, I don't particularly have a dog in that fight. Obviously I have my views, but I don't care to share those with everybody because it will polarize my audience and they'll go, oh, you're a jerk for this reason.
I will also agree with you that it's not going to be the end of the world if the Democrats win because, quite frankly, the markets have a history of doing quite well during Democratic tenure, except for a handful of them, but most of them have done pretty well on balance, better than the Republicans. And I thought you brought that out well in your webinar, which, by the way, I would recommend everybody watch your webinar.
Thanks, John.
How can they find that webinar, Merlin?
You can go to otacademy.com under webinars. It's right there. It's archived. Happy to get the feedback on it. And of course, if you guys have questions or comments or feedback, it'll bring you to a YouTube page, and you can simply leave your comments down below it. On that note, I went to show this image. I find it very interesting when we take a step back and we think of the political parties. most people would say, if you said who's better for the markets, they're going to go, well, it's Republicans, right? They're low taxes, they're pro-business, they're or they're anti-regulation. Those types of things you would think would vault their success. Well, here's a diagram or a table. It might be kind of hard for you guys to read. And I referenced this one in the webinar. I didn't have the image up, but here you go. Going back to Herbert Hoover, starting in 1929, it goes through and shows each president's term, and then shows you their 4-year return during that period of time, as well as annualizing it. And I was literally shocked. I did not expect this result whatsoever. If you look at the bottom there, the average Republican rate of return per year during a 4-year term, right, so per year, is 1.71%. It doesn't seem like much. And then you look at the Democrats, you're like, it's 10.83. Now, to be fair, this doesn't include President Trump's previous term, which obviously I'm assuming would bump the Republican average up pretty good, but it might get to 2 or 3 or maybe 4%, just looking at the averages. But all in all, 10.83% per year during the term. That is pretty unbelievable with regards to market gains. So, if people thinking this market could be apocalyptic and crash and it's the end of the world if a Democrat gets elected, well, history has shown us they're actually pretty good for the market. So we'll have to wait and see.
Yeah, that's the case. I remember when Obama was elected, the word on the street was Western civilization was going to melt down.
Yeah, right.
Of course, we were coming off a big bear market. We'd had the crash in the housing sector. And so he takes office in January of 2009. The bottom of the market is March of 2009. He inherited that mess, the housing crisis mess, from Mr. Bush's term. And, of course, we've had nothing but a great bull market for, 7 years after that?
Yep. Anyway, I wanted to share that visual with the viewers out at home. I loved it. That was actually put together by Bloomberg. But, it's amazing when you have these perceptions in your head of the way things are and the way that they're supposed to be and belief system. This was actually this table shattered my belief system. I actually was always thinking that Republicans just dominated with regards to market gains, and clearly it's the Democrats, which is shocking.
By the way, you know what that is, Merlin? That's a confession of how our belief system, that we are really impaired by our belief system. And until we take the time to really look at the data, a belief is just a belief. It's like an opinion.
It is.
But it doesn't mean just because you believe that, and you probably believed that for a long period of time, because that's kind of the meme about, Republicans. But, there's been a blurring of the line. Some of the biggest deficits we've ever had were in a Republican administrations. It's not that they used to run on the premise of balanced budgets. Right. Reagan outspent everybody, But, if I were to talk to you about what was Reagan about, I mean, the GOP adores Reagan, but if you look at his fiscal policies, you would go, my God, I can't believe how big the deficits were.
Well, you look at his first term from 1981 to 1985, he averaged 13.7% gains per year. Cheers to spending.
Yeah. Well, that's what deficit spending does, right?
Yeah, right. 100%. All right,
cool. But by the way, in fairness to him, he did cut taxes. And that's why he ended up with big deficits. Because he kept the policy of spending. He cut taxes, so he ran big deficits. Well, you have to cover those deficits some way, and you borrow a lot of money.
Right.
But what would be interesting to put another column there on your piece and look at what the deficits were as a percent of GDP during each given term, and we could probably find that information quite easily.
Well, you know what? I'll leave that to you. You got time. You can build that one out.
All right, so I just get to add one column. That's it. You get 6 columns. I get 1. Is that what you're telling me?
No, I'm utilizing Bloomberg to help build this one. You can do it on your own. You can add as many columns as you want, but you got to do that.
Well,
research.
I use Google.
Oh, is that what it is? Yeah, trust but verify, John.
All right, I use Google.
Let's do this. Let's take a quick break. I didn't realize we'd be going straight through. We'll take one quick break. We come back. I want to go into the One Road project that China is doing. We had a conversation earlier about the reserve currency of the world. Bretton Woods obviously afforded that to the U.S. dollar. But is that going to change? Oh, we'll have to wait and see what John's thoughts are on that one going forward. If you guys have comments, questions, suggestions, just want to say a shout out, send it on our YouTube channels. We're broadcasting under Power Trading Radio's YouTube channel. So hello to Gizmo Unscammable as always. Doris, welcome. Hope you guys are having a great Friday out there. It is Friday. And on Power Training, or Online Training Academy's YouTube page, we've got Gayer, Vernon, John, and I think there was someone at the top earlier there, and there's Dana as well. So I hope you guys are doing great out there. Those that are lurking in the shadows, because I can see you hiding over there, feel free to join the conversation, say hi, be friendly. We'll be right back after a short break.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way. Click here to get started with Online Trading Academy.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at powertradingradio.com.
Welcome back to Power Trading Radio, everyone. It is your weekend edition. My name is Merlin Rothfeld. We are joined today by the Ambassador of Opportunity, John O'Donnell, who's joining us from an undisclosed location today. We're talking macroeconomics on this show today, just kind of a little bit about everything. We've had a lot of talk about the trade war going on, so you kind of hopefully put some things in a little bit better perspective. There's a lot of misinformation out there in the media, and I'll tell you what, if you turn on your Fox, your Bloomberg, your CNBCs, they all sensationalize it and keep saying the deal is done, deal is done, deal is done, done. But again, until we get a signature and something signed, it's not done. And even then, there may be some issues with it where things get called off right away, because we do have two very fiery leaders who are not worried about saying something inappropriate, we could say, or doing something that might jeopardize that agreement. All right. One thing I wanted to get out there, there's a project out there called One Road, which is very interesting. I think it's One Belt, One Road, which John brought up a while back on the program. And it's really an attempt, which honestly I think it's a great initiative for China, to make them the center point of all trade into Europe and to Asia by creating a series of transportation roads and highways and shipping lanes, basically they call it the New Silk Road, that really gives them the global dominance in that region. And obviously that would be very, very beneficial for them if they made trade much easier. You remove barriers or you create more barriers to entry for any other country trying to get into Europe and to Asia. That initiative is obviously going to have a greater impact on their GDP. At this point, China lags significantly in overall GDP compared to the U.S., but they've been gaining at a much bigger clip. Now, as we stand today, the U.S. dollar is the reserve currency of the world. That really was given to us with Bretton Woods after the war. So the U.S. dollar is pretty much everything's priced in dollars, right? Is a belief system, I believe, that will remain there forever. Before the U.S. dollar, it was something else. And before that, it was something else. It will always change to the more dominant regime. John, I have to ask you, do you see a point on the horizon where China is taking such global market share, not only in trade but in consumption as well because of its population? They have locked up those shipping lanes, locked up the transportation routes to Europe and Asia. They far surpass us with regards to GDP, and all of a sudden we see the yuan become the reserve currency of the world.
No.
You don't?
Okay. No, not in the short term. Okay. Not in my lifetime.
Okay.
However, in your lifetime, higher possibility, but not in my lifetime.
All right.
Here's why. We control the global shipping lanes through our Blue Water Navy, and the global shipping lanes over water is really what matters. Mm-hmm. What their project is about is mostly over land with rail. I mean, they are building railroads, and railroads are very important because you can move massive tons of goods across land masses. But the most efficient way to ship goods is via water, and we control the waterways. Now,
Well, we
there
control
are
the waterways around us, around the United States.
No, well, we also control the waterways out of Saudi Arabia, the Straits of Hormuz. We control the sea, shipping lanes. I mean, our blue water navy dwarfs all the other navies combined. I mean, take a little bit of time to do some research on what our navy has the capability to do.
Well,
there's something else we need to keep in perspective here, Merlin. The GDP per capita in the United States today, with the latest data that's published, is $64,000. The GDP per capita with our population.
Mm-hmm.
The GDP per capita in China is $8,800. Now, they've got a long way to go where they are presently the job shop of the world.
Yep.
But a lot of that job shop of the world work because they've had 2-3 decades of very cheap labor, 2 or 3 decade head start in building supply chains to become the job shop to the world. But now the rest of the world, as far as their job shop capabilities, are starting to pick up. You're starting to see production move to Malaysia. You're starting to see more production move to places like Vietnam. Mm-hmm. You saw that when you visited Vietnam, I'm sure. And you don't just snap your fingers overnight. Americans, and we're the biggest consumption economy in the world.
Yep.
We're only 5% of the world's population, but we consume roughly 20-25% of the world's goods that are produced. So we need that supply chain to produce the goods, but they've got a long way to go. And I don't believe in my lifetime their GDP per capita is going to surpass our GDP per capita. So I wouldn't sweat that.
I wasn't
over
worried about
the next 20, 30
GDP
years.
per capita, just overall GDP. And I think
Well,
once you're at that point, you can start to be a little bit more of a shot caller with regards to, you know what, we're doing so much trade here and we control this, we're going to price it in yuan.
Well, they could price it in yuan, but that doesn't mean, right now we're buying goods. We do trade with Europe. Some of those goods are priced in euros. Some of those goods are priced in Swiss francs. There's nothing wrong with that.
No.
I don't see them becoming the reserve currency of the world because you have to ask yourself, what would you replace the dollar with? You'd probably follow the guidelines of the IMF and replace the reserve currency of the world status with a basket of currencies. Do you really want a communist country being the reserve currency of the world?
I definitely don't. But at some point, when you are the one who's calling the shots, you can kind of make it what you want. Look at this.
Well, that's my point. I don't think they are the ones that are always calling the shots.
Not yet.
They were calling the shots until we had a trade embargo too, weren't they?
Yep.
And some of that shot calling capacity has been diminished.
Yep.
And remember, we have flexibility now. We can manufacture goods, intermediate production, which we do in Mexico. We can do production in Malaysia, Vietnam.
Yep.
There's a lot of places in the world where, especially with the equipment that's available today, and with automation that's available today. So I'm not. My personal opinion is I'm not too concerned about it in my lifetime. You should be more concerned about it than me.
Yeah, I'm not really concerned. I just think it's going to be one of those things that it'll be in a history textbook. It's not like I'm freaking out if it happened to be there's a different reserve currency. It is what it is. Obviously.
Well, let's learn a little bit from history. What was the reserve currency of the world before the dollar became the world reserve currency of the world?
Say the pound?
Yeah, the British pound. Did Western civilization melt down when they lost their status?
Nope.
No. The world went on, okay? And that was quite radical. And that really took place right after World War I.
Right.
But what's interesting, before Great Britain, who was the dominant GDP in the world?
Rome?
No.
I don't know.
China and India.
China and India. All right.
China and India had more GDP before the Industrial Revolution.
So basically what you're saying is they just want the power back. As Public Enemy who said, bring the power back.
Well, it's good to be king, but I'm not convinced in the world we live in today. And by the way, you have to assume, in the statement you've made, is that the fiat currency system stays in place, that there is no competition to the fiat currency system.
Yeah.
And you know as well as I know that technology could have something to say about the form and function of the next reserve currency of the world.
Absolutely.
And I happen to believe the high probability is it's going to be a basket of currencies, not one.
That would definitely make sense. I wanted to bring this illustration. TJ brought this one up for us. This is showing you the One Road, One Belt initiative, which is showing you some of the land stops in red, and in blue you have the maritime. So it's not like they're dominating the world with it, but they're just setting up infrastructure to say, look, you know what, we want to be able to make sure our kids get down into Singapore and Thailand and Malaysia, get down into India. What's interesting is Nairobi was like the lone African stop. Of course, that's probably just the gateway to get into Africa. But then you've got Athens, Venice, takes trains up to Rotterdam and Duisburg. So, interesting. It's an interesting product, and I think it's something that will really help China going forward with regards to trade on the Asian continent and European and African continent. All right. What else we got cooking? Obviously, we have the best team in football is playing this weekend. That's the 49ers. What are you doing this weekend, John?
Well, I'm doing a power trading workshop.
Okay.
And why are you asking me that? I probably need to look up where it's going to be.
It's tomorrow, is it not?
It is tomorrow, but sometimes my calendar gets a little confused at my age. You know what I'm saying? While we're talking, I'll look it up. I know it's going to be 10, and we're going to talk about some of these topics. But it looks like to me, if I can get the right month up in this damn phone. Here we go. No, here we go. I'm in the right month now. Oh, it's going to be in Hermosa Beach.
Oh, nice. You going to bust out your surfboard and catch an early sesh?
Well, I am going to go up a little bit early. They got a special place that I like to go to breakfast up there. That's kind of cool.
All right. John will be in Hermosa Beach this weekend doing a workshop if you guys would like to participate in that one. Joanne will probably be throwing a link up in your social media channel right now. That will tell you all the information you need to know about whatever center is closest to you. There are 48 physical brick-and-mortar schools around the world. So if you'd like to know more about how we can help educate you and how these financial markets truly work, let us know. Click that link. You can find out more information. John, thank you so much for joining us today. I appreciate it. I will see you in 2020, my friend. Have a great holiday and a great New Year.
Well, you be careful. I hope not. I hope. I know how much you don't like coal, so I just hope that Santa doesn't put a lump of coal in your stocking this year.
Oh, trust me, Santa spit on my cookies years ago. Before you leave, you're hosting all next week. Can you let our guests know or let our viewers know maybe who you got coming on the show?
Well, I've got a gangbuster set of people, and I sure hope all your listeners tune in. Some of these people have been on Power Trading Audio before, and they've always been very, very popular with our audience. We got Jeff Deist.
Oh, nice.
We got Richard Ebling. We've got Mark Thornton, and we got Mike Munger. So we've got quite a lineup. These are all really bright, articulate people, and we're going to get their opinions on what's going on in the world. Especially, I'd like to get their insights on how they see this trade deal working out.
Yeah, certainly. Well, great. Well, John, thanks for stepping in and hosting next week. Hope you have a great holiday. Until 2020, my friend. I will see you soon. Take care.
Peace.
He's out of here. All right, cool. And Scamble, no one's crying about automation. I think we're all embracing automation, and it's not about being a whiny scaredy cat. You crack me up sometimes with your associations. It's simply sign of the times and evolution of markets. We will probably see in my lifetime a new reserve currency. I agree with John. I think it should be a basket of goods and services, so it doesn't give one country the power to manipulate everything as we have had the luxury of doing for so long. But, hey, we'll have to wait and see how it all pans out. Bottom line is I'm just going to manage my investments, manage my trading, and whatever happens, happens. I'm not scared about anything out there. Doris, you're welcome. Thank you, guys. And Gizmo, yeah, as well. Thank you, guys. Help financial education. Make the Creature from Jekyll Island required reading. That might not be a bad idea. It's a pretty darn good one. Let's see. I want to go into economic calendar for tomorrow. Actually, real quick, do we have Dana says, thanks. Have a safe holiday. You too as well. Let's go to your economic calendar for Monday, December 16th. Obviously, I will not be here, but it is a heavy, heavy manufacturing day. You can see for the U.S., flash manufacturing PMI, Empire State Manufacturing, also for Europe, also for the British pound. So big manufacturing and services days going on for our major three countries, U.S., the European Union, and the British pound. For New Zealand, you have the ANZ business confidence numbers, as well as Australia coming out with monetary policy meeting minutes. Moving on to your earnings calendar for Monday, you would think it's done. No, we've got Heiko Galp Energia, Lion Corp, Screen Holdings, Exo Corporation, and Ascent Capital will be reporting earnings on Monday. John O'Donnell will be the host all week. Hopefully you guys will join him and participate in some of his discussions. He's always got great guests on that have maybe opposing viewpoints. But I think that's the beautiful thing about having a show like this is we don't all have to agree on something. That's why markets work. One of you might believe one thing, another one of you might believe the other thing. Bottom line is we all just agree to just get along. We can have differences of opinions about the way things work. Bottom line is our trading accounts hopefully will be growing. That's the most important part. All right, that will do it for today's show, everybody. Again, I want to thank you for the continued support, the listenership that goes on. You guys have been great. I love the fact that our community seems to be growing. Sometimes we get transients that come in here, but we love to have regulars on the program. You guys make it all fun and worthwhile. Hopefully we'll continue to educate you about how these markets and have engaging content and guests in 2020. Again, if there's things that you would like us maybe to incorporate in next year's programming, let us know what it is. Send it on in at powertradingradio.com. You can click that button that says Power Blast. We'll review it, maybe make some changes to our content, our flow, our guests, or how we do things. In April, it'll be 10 years that I've been hosting this show. I can't believe it's actually been going on 10 years. But we continue to change things based off the feedback we get from you. And hopefully you will continue to give us some feedback and support and spread the word about Power Trading Radio. Obviously, we'd love to grow the listener base and make it more interactive. It's funny when I look at some of these, let me be blunt and rude like I normally am, I look at some of these idiots on YouTube, and they've got like 6 million views on a page that they basically are doing stupid stuff and not even talking about markets. It's just dumb, basic education, stupid level, but they got 5-6 million views, and I look at the end of the day and we've only got a couple hundred views, and we give away great content on this show and talk about great things in the market. Anyway, hopefully we can change that in the future. Either way, I'm going to continue to keep doing the show, and I hope you guys continue to watch. Hope you have a fantastic holiday. I will see you in 2020. Make sure to join John all next week as he's got some great guests. Take care, everybody.